Good morning, Sense of Things family. It's Jeff and Ron here for another weekly update on what's going on in the world and what's going on in the economy and the markets. Ron, good morning, sir.
Good morning. Spring is in the air. I don't care what part of the contiguous 48 states you're in, but spring is in the air.
It is, except for Colorado and the western territories out there. They like a massive blizzard today again.
Hey, they chose to live there. There's no excuse.
You know what? The way I look at it is the worse the winter gets there, the better it is for water and everything else downstream. So the more that they get in Colorado and the mountain areas, that just
they
means
supply
California
us in Southern California.
Yeah, even in the Sierras in California, they've had record snowfall this year. So that means they're actually going to have water to survive on, which is good strategy. It's spring, as we've talked about, and I wanted to share my screen here and talk about spring break. It is spring break across the country. I know most of Texas schools are off this week and next week. People are heading to the coast here and heading south. I remember when I was in college, it was fun to go to Matamoros. Now it's a death trap. So I can't imagine people going to Padre Island and going across the border into Mexico. Maybe there's some stupid people, but interestingly enough, as I was looking around at what's going on spring break wise, interesting story about Miami Beach. And I think you were saying you were in Florida last week about Fort Lauderdale. They are just cracking down on spring break.
As much of it is as an injection for business for the local businesses and the hotels and all hospitality in general. What's the other side of it that we don't know about? Whether it's crime, vandalism, which is crime, but who knows?
Yeah.
Well, this isn't something new. I mean, this has been going on 40-something years, whatever.
Oh, yeah. It's been going on since really the late 40s, early 50s. That's when once again, it's that baby boom generation. It's everything. The baby boom generation kind of created spring break. And I know it was fully in swing when I was in college. I think I only ever once went to a spring break, but.
Now, I did Fort Lauderdale one year. It was the way my college did it. Our spring break was like the week after the 3 or 4 main weeks of spring break for everybody else. So it was a little less crowded, but I saw some crazy stuff and people and college age people just doing stupid things.
Oh yeah. Yeah, like I said, it was weird for me because I was in the military. By the time I got out of the military and I was finishing up my last year of college, I did one spring break just to say I did it. At that point, I had already been all over the world and lived in some really horrible places. And the last thing I wanted to do was go hang out with a bunch of snotty little 18-year-old college kids at that point. But yeah,
I think you got to get it out of your system, because after I did it, I was like, all right, I don't need to do this again. There are plenty of other fun things you could do in spring break.
Absolutely. And a lot of times it was just hanging around town and enjoying myself and not having to go to school for a week. But yeah, it's really intriguing from that perspective. I know you have some pop culture you wanted to share. So let me unshare my screen.
Let me bring that up. Just see here. I think this should be good. Let me know when you see my screen.
There we go. Oh boy, here we go. Worst decisions.
Yeah, here we go. More bad products. So obviously somebody did not look at the printing on this, because I don't think you could really use this to properly measure things and cook.
You just have to keep taking it and then looking at the side, taking it, looking at the side.
Not only that, but if it's not see-through,
nope.
How you gonna get any level of accuracy? Anyway. All right. So is McDonald's giving you a hidden message? I'm just saying.
Wow. Okay. Interesting.
And I got to tell you, I saw the image before I even read it. That's how this thing stands out. I got to tell you, McDonald's actually has some decent coffee. I will say.
Yes, they do.
But
Stupid marketing company, but
I get coffee a couple of times from there a month. I don't remember seeing this at holiday time.
I don't either, but wow.
Yeah.
Okay.
So nothing to say about this product design, just bad news, people.
Wow.
Yeah.
Interesting.
Right. So I know people, when I did all these slides the other day, I'm thinking, oh my God, from this point forward, people are thinking, Ron, I think there's a theme. So nothing to say about this product. By the way, it's available on Amazon. And my
Wow.
question to you is, what country is this a delicacy?
I'm trying to figure this out. Is it Middle
And
East?
this
Maybe.
isn't a gag gift. Like I said, you could go onto Amazon and buy it.
It's interesting. Yeah, I'm like, wow. And they don't even, it's not even a, oh, by mistake we did this. They're obviously telling you where we're going with
This is the way it's
this.
being marketed. And we probably should have put a disclaimer or disclosure in the beginning that children should not be watching our podcast today.
Apparently, yeah.
And all I'm saying is, really, I want to know who's buying this buttermilk.
Aye. Okay, once again.
I've never had buttermilk before. I'm not even, I guess you would use it in cooking. I don't even know.
Yeah, just wow. I don't know where to go with that either.
No. All right, moving on. I know there was a bit of a theme today. We apologize. We'll change it up next week. But my quick chart today is talking about overbought, overextension markets. And yes, we've been the bear camp looking at the undercurrent of economic numbers for several months, despite what the market is doing. And there has been some more broad-based rally in the last couple of weeks. But I got to tell you, I've never seen this level of overextension of this. Now, so what this chart means is that stocks over the 200-day moving average. So the moving average, the 200-day is the red line here, and the 50-day is up here. Typically in the trading world, day traders or whatever will use the 50-day. Institutions will use the 200-day. The extension above the 200-day is just absurd. But not only that, if you look at the relative strength, anything above 70 is overbought. And it could stay up there for a while. But many times, and we don't have the chart going back several years, many times it'll peek its head over for a week or two, because this is a weekly chart, and come back down. This has been extended now for basically 2.5 months.
Yeah.
I've been either in the market or trading very actively for 15 years. I've been following the market for 40. I've never seen this type of an extension and this type of an overbought environment. And maybe I got to go back to 97, 8, and 9. But this is insane. What are your thoughts on this?
I agree with you. And you've got the Dow Industrials there. I would venture to say, and I keep track of it, and I realize this, especially on the NASDAQ, it's even worse. Relative strength on the NASDAQ was like riding up there in like the 75 range for like the last month. As I've been saying, it's just, I know in our portfolios, we pretty much backed out of most of like the QQQ stuff and things like that this month, which fortunately it's helped out amazingly, but it's just so far gone on all these areas. And even in the Dow Industrials, it's still just a few, like 4 or 5 of the more technology oriented ones that are really pushing that up. If you took a look at that, Boeing is completely dragging that thing down, and a couple of other stocks are dragging it down, and it's just going through the roof. I think we are due for either a pullback or a sideways motion, but I think we're due for a pullback. We saw some little signs of that last Friday going into early this week, and then Nvidia just keeps pulling everybody along with them. There's going to be a reckoning point where the market has to blow off a little bit, and we need that. Quite frankly, we just can't keep going up at the pace we're going up.
And I heard a really good theory by 2 different people that I follow in the last couple of weeks about why we haven't seen more profit taking, or why we haven't seen people taking some chips off the table and harvesting. And the theory behind it, I guess it really makes a lot of sense in today's market versus even 5 or 10 or 20 years ago, is that with the passive investing and with the ETFs and the funds, that with the inflows, right, more money is coming in than coming out. And people they're holding on to these funds and not selling the funds versus buying more individual stocks.
Yeah.
That makes sense.
It does.
That.
And I mean,
but at some point, reality's got to set in, and you know what's going to happen. The institution are going to pull money off the table first and leave the retail investor hanging dry.
That's pretty much what you can imagine is going to happen. Although the other side, I'll play devil's advocate there. You know what? People are pouring money into 401ks every week. and that money is largely going. I've seen the trend. You and I have both been in the 401k business for a long time. What I've seen the trend being is a lot of what I would consider the more rational investment managers that had actively managed funds are being booted out of 401k plans. And what's being replaced is just straight indexes. So that money just every week keeps coming in. And these fund managers don't get to say, geez, this thing is way overpriced. They have to just keep plowing money into it based on the percentage that the index is showing. So unless there's some kind of major reshuffle in the index with some of these things, or some of these companies just stink it up, I just don't see where the pullback happens until all of a sudden that money flow slows down drastically.
Yeah, it's been impossible to time this market. The last 4.5 months has just been unreal. I don't even know any other way to describe it. But I think if I had to make a prediction, I would say in the next 30 days, I think we're in for at least a 3 to 5% pullback for two reasons. One is we're coming to the end of the quarter, so probably a lot of funds want to lock in profits, so they may start taking something off the table. And I think once they lock in profits, either right before the end of March or in the beginning of April, I think that's when they pull things off, let the market digest, come back to more realistic levels, whatever that is, and then we'll see money come back in. We have a lot of clients, I'm sure you do too, and I hear about other advisors that still have a lot of client money in short-term treasuries earning better than 5%, risk-free. And so all that money, you could look at it, I hate the expression, money, cash is on the sidelines. It's there.
Yeah.
And it's ready to be deployed. But I have clients that are like, with the presidential election and everything else, and where the market is, who is begrudgingly putting new money at these peak levels?
Yeah. You're still getting on the short end of the market, whether it's treasuries, which are basically no risk at all, or CDs or money market rates, or whatever you want to say, are basically high 4s to low 5s at this point.
Yeah.
If you're concerned about the markets, why would you even begin to deploy that capital when you could sit on 5% for a bit?
And I agree.
For the more conservative investor, I think that's not far off from what they're thinking at this point of just, hey, I'll sit and wait this out. I'm getting a little bit better. It's staying high enough that I'm getting better than where inflation is at. And leading into that point, looking at CPI this week, we had CPI come in and it was a surprise again, and it's staying up there. Although it came down from the highs up here, and we were at the beginning of the Biden presidency, we saw that massive rise, and it's come down, but it's starting to mellow out here and start to sit there. And that's what the Fed is looking at. And we look at, here's where the Fed's target is. They like to be in this 2% range, and we're a long way away, and it's losing that last 20 pounds of fat.
I think it could take 3 to 5 years for it to sift out, because all that money that was injected in the economy doesn't go away.
No.
Right? And now I heard the Big Mac, right? We were joking about this 7-8 months ago. A Big Mac meal, whatever, it's $12 to $15 now. If inflation comes down, you think that's going to go back to where it was? No. So I think 3+% CPI is here to stay for quite some time.
Yeah. And you look at
before we go under 3. That's my thought.
Yeah. And you look at ex food and energy, it is persistently, the services ex food and energy are just not coming down. They hit a peak in sometime mid 2023. And they're coming down, but they are not coming down fast. Now, commodities have come down, but they're still that actual service price, because people are having to pay more for employees. We talked about that. An employee I just hired, I'm paying 30% more than I was for somebody that I'm replacing.
30% more, that's okay.
Yeah. Yeah. If I'm getting 30% more work, then that's fine. That's not going to happen. I look also, today was a big day for a lot of just news out. Today was PPI retail sales, initial jobless claims. All of them are high trading impact. And once again, Traditionally, if you've watched the show, I used Econoday for years. I made a switch over to briefing.com primarily for some of the stock research I do. And I just really like the way they present their economic calendar. And what I will tell you is they're pretty damn close on their forecast and the consensus that they use. It's a consensus of economists that contribute information to briefing.com. They're pretty damn close in agreement and their forecast. And today PPI surprised everybody. The main PPI 0.6% versus estimates 0.3%, and that was consistent, and the prior one was 0.3. So when we start to look at, all right, is the Fed going to loosen everything else, we go back to the CPI numbers. They're moderating, and there's nothing that's going to tell the Fed, even with these numbers with PPI, there's nothing that's telling the Fed, okay, we need to slow things down a little bit. And you look at consumer price index has been going up at a pretty hefty clip and is staying high. PPI actually has not been that bad, but it's starting to creep up. So it's squashing the margins that a lot of these producers
actually challenging many of our economic numbers that have been coming out in the last 6 months.
Yeah.
And when you get through, I wanted to circle back on the unemployment number. I heard some interesting analysis from some analysts last week.
Yeah, and we'll just cover that real quick here. Initial claims came in lower than the forecast was 218, consensus 220, briefing.com's forecast. They came in at 209. But I think to your point here, you've got the revision. So they revised from 217 down to 210, and it's been this kind of consistent thing. And I think just a couple things I wanted to stress, and then we'll go into your piece.
Yeah.
As I was looking at some of the key factors in here, one of the interesting things that I got from briefing.com's analysis of the PPI was this one sentence here. The final demand of goods increased 1.2%. Nearly 70% of that increase is attributed to the index for final demand energy. So it's that back end side of the production costs are largely being pushed by energy cost.
Yeah.
And energy cost is starting to creep back up again.
Yeah, it's amazing. And I know we talked about this a couple of weeks ago. I don't know how oil isn't over $100 a barrel. That's that's why I don't invest in oil. I've been saying oil, Bitcoin, crypto, and precious metals. I don't understand.
They're manipulated, and that's it.
Works.
Yeah.
But where I was going with this is that if you look at it, gas has actually moved up and the price of oil is stabilized or even gone down.
Mm.
So there's definitely manipulation there. I wanted to talk about the unemployment number. So everybody looks at the headline number with all this stuff, but going into the internals, I thought was interesting that a couple of economists and analysts were really going into it, that the majority of the quote unquote new jobs created are all government jobs.
Yeah.
And that government spending has gone up. So this is where behind the scenes, the puppeteer with the government is manipulating our numbers. Because I remember 10, 15 years ago, I knew some people that worked in the government pretty much their whole careers, and they had said that government's getting smaller. I'm like, what do you mean? They said a lot of people retiring and or leaving, but for every 3 people that leave, depending on the department, for every 3 people that leave, they're only hiring 1 back.
Okay.
Right? Shrinking of government, whatever. I believe it's the reverse now.
Oh, I think so too.
And with all the spending that the government is doing and injecting the economy, it's giving you a false sense of things are really good. And now I heard a report, actually it was on, I can't remember which program it was, but they were talking about, I think it was Vanguard had given an analysis about their 401k plans that over 3.1%, which is twice the amount it ever was in the past, people are doing hardship withdrawals from their 401ks or borrowing against their 401ks to pay mortgage and bills and whatever. That's not a good
when you get to the point of a hardship withdrawal, you've exceeded maybe 1 or 2 loans that you're allowed to do. So that's impacting your cash flow. If you get to the point where it's a hardship withdrawal, you either have some massive health issue or you're literally going to lose your home
Yeah.
at that point. And all that they're going to allow you to take out as a hardship withdrawal is the money that it's going to take to get you back to where you're not losing your house. It's
Right.
not going to fix the problem.
And it's all going to hurt you in the future because these are all tax deferred funds.
Yeah, exactly. But that's one issue. But I think the other part is it doesn't fix the cash flow issue at all. It's not fixing the cash flow issue. So if you've gotten yourself into trouble at that point, the chances are you're probably going to get yourself into trouble again because there's less money coming in than is going out in your situation. And that's scary. As that number keeps going up, it gets scary. And we're in a good employment situation. That's the thing. You've got really good employment. I just heard something off the ear as I was driving in this morning, and it was an interesting thing that I need to do some more research on. But the guys on the radio were talking about that although debt has increased, credit card debt has increased, assets have increased at a higher level than that. And I'm thinking to myself, yeah, that's okay, but you don't always get to spend assets.
No, it's that infamous thing, the wealth effect. The market goes up, everybody thinks they're wealthier.
Yeah.
Again, it's not money in your pocket, it's money down the road. But we all know trees don't grow to the sky. So we'll have to see how this ends. But
I measure wealth creation. Yeah, I measure wealth creation by the amount of income that my assets, generate for me. So if I've got, yes, I could be wealthy because my house has gone up 35% in the last 3 years, but I don't get to spend anything. All it is a big sucking hole of money that sucks money out of my pocket.
And even if you refinanced and pulled money out or did it, doesn't matter. It's just you're borrowing against your wealth. It's not extra wealth. That's another whole debate.
Exactly. Like I said, I think our thought process has been over the last year. I personally think we're getting there. It's taken a lot longer than I expected, but just more and more cracks are showing up. And I don't think the government's going to be able to come to a rescue of, putting more and more money in. I just heard this morning, Bernie Sanders is trying to pass some legislation on reducing the work week to 32 hours a week. And I'm like, but paying people 40 hours. I'm like, okay, you've never had another job outside of government. And you've actually never had to write a payroll.
Most of them haven't.
Yeah. And you've never had to write a payroll ever in your life. You have no idea the stupidness of that just to try and buy votes.
Productivity goes in the crapper at that point.
Yeah. The reality is one of my businesses I run has a physical location. We do testing and we do co-working and everything else. I can't hire another person to cover that extra day. It just wouldn't work. So I'd have basically two 20-hour-a-week people, and I'd never be able to find them because I don't have those people in my world. I tried to hire one recently and I couldn't find anybody that was willing to work a more part-time schedule. They wanted 2 part-time or they wanted a full-time schedule. But I think what people are like, I think the younger generation's looking at this going, oh, this is a great idea. Work 32 hours a week. But I'm like, I still have to cover 40 hours.
Last quick point. It just happened this week. So we're talking about earning more, working less, and inflation and all the other stuff. And basically, if you remember going back, that just the interest, the debt on our treasuries, on our nation's debt is now greater than our military budget.
Yeah.
Right. Our debt is over 34 trillion. All these things that everybody knows. Here's the other thing. So they just presented the new budget. They want to spend more money.
Oh, yeah. We want to tax the corporations more, but we want to spend more money. Okay.
We want to spend more money.
Yeah. If you're going to stop spending money and tax me a little bit more, okay, great. That's fine.
Reducing our burden.
Yeah.
That's what I want. Yeah, no, keep spending. We got a printing press. Keep going.
Yeah.
That's going to come back to bite us at some point. Maybe not our generation, but the next one.
Yeah. And I think when I pulled in this morning, the guys on the radio were talking about we literally, in the next 3 years, the guy that was on is like a treasury analyst or whatever. And he was like, in the next 3 years, we're going to have to refinance half of our outstanding debt because we've done all that short-term borrowing here We're going to have to refinance half of that debt. And I don't see interest rates going down anytime soon.
No, and I got to tell you, you and I have been on the similar page about rate cuts. And, the funny thing, they're talking about November, December, then it was March, now it's May, now it's possibly June. Now maybe it's one or two times. There's a very good chance, and I'm going to say a 50% chance, they don't lower it all this calendar
Absolutely not.
year,
With these,
unless there is a catalyst or a crisis or something. If things continue, why would they lower rates?
Yeah, it makes no sense. Like I said, when you're looking at that CPI number, it was coming down at a pretty good clip. And then all of a sudden it started to, you and I are both chartists. So it's like when you start seeing a chart just moderating out, it's not going to go down. It's not like it's in, and typically the market overcorrects. If you were to say, okay, inflation's coming down, then it should be coming down and go past that 2% mark and then come back up. And it ain't doing it. It's starting to turn out to where it's getting flattened out, and it's flattened out higher than it's been since 2008. Yeah. It ain't going down. I'm sorry. And I think there's probably a 50-50
not if they keep printing more money, not if the government keeps spending.
Yeah.
It's going to level off.
I think there's a 50-50 shot or better that we won't see an interest rate drop at all. Because really, when you think about it, they've only got from, let's call it May, June, where they potentially could do it, to about September. And then they've never historically done anything prior to an election in those last few months. So that means that you have basically 3 months where they could potentially do it, where there's nothing on the table I see today that would make them want to do it. They're not going to do it from September to November. So then they've only really got until December. So either things go to hell in a handbasket during the summer, and then they have to go panic mode in December and into the new administration, or they just do nothing at this point and inflation kind of hangs out where it's at because they don't want to see it spike back the other way.
Yeah, I think the meetings are March. I think you got May, June, and July. You skip August, and then you're right. So if they're going to do it, they may do a quarter of a point by July.
Yeah.
But there's got to be something that triggers it, data dependency. But you're right. There's no way it's going to happen in the September, October meeting.
No, and that quarter point is going to do nothing
behind that political motivation.
Yeah, and the quarter point is going to do absolutely nothing at this point. It's really them saying if things start to go to hell in a handbasket, okay, what do? You've built a nice big, they've basically given themselves a lot of dry powder. I think the thought process, or what I would be thinking if I'm sitting in that chair at the Fed, is, okay, we've built a nice big powder keg. So if something does go to hell in a handbasket, we have the room to do 50, 75, 100 basis points quickly and give a shock to the market or whatever. So a quarter point here and there, what's the point? It does nothing. And all it could potentially do is just push the asset prices up.
They're lowering rates, even if it's a quarter of a point, and they don't do it again for 6 months. Oh, they've begun the process.
Yes. So we're not going up anymore. Okay. Reality says it doesn't make any difference.
To be seen.
I agree. Folks, thank you for joining us. As always, we work hard to put these shows together for you. So make sure that you keep commenting. Had some wonderful conversations with folks on YouTube. So we appreciate you sharing with us. Make sure that you subscribe to the channel so you catch the updates as they come out. And we will catch you guys back here the very next week.